Are you ready to unveil the secrets of today's market? The dance of hope and caution is alive, and the top stock movers are making waves. Welcome to AI Finance Buddy, your guide to the latest market trends and their impact on you. Today, tech stocks shine brightly, while energy faces challenges. We'll explore standout performers like Warby Parker and Darden Restaurants, surprising investors with their strength. I'll also share a vital lesson on tracking your net worth, an essential step in transforming your financial journey. And don't miss the inspiring tale of Mark Whitaker, who turned his savings into a wealth-building powerhouse. Stay with us, for every moment is a step toward your financial freedom. Chapter 1, Today's Market News. Today, the market dances between hope and caution. The technology sector shines, fueled by strong earnings, while energy stocks feel the pressure of shifting oil prices. Financials are in the spotlight, as the Federal Reserve's comments on interest rates keep traders alert. This blend of earnings surprises and economic signals creates a cautious yet optimistic atmosphere. Let's look at the top 3 biggest stock movers. First, Warby Parker, the stylish eyewear retailer, is making headlines. TD Cowen has reaffirmed its buy rating, citing strong growth and rising customer numbers. Their partnership with Google Glass is a game changer, expanding their market reach. With a solid strategy, Warby Parker is poised for impressive revenue growth. Next, Darden Restaurants, the parent of Olive Garden, surprised investors with better-than-expected earnings, proving its resilience in a competitive dining scene. Strong same-store sales show diners are still flocking to their tables. With a robust strategy, Darden is set for continued success. Finally, United Parcel Service, UPS, the logistics leader, sees a slight rise in stock as Oppenheimer upgrades its rating to outperform. Despite concerns of overvaluation, UPS remains appealing for dividend-seeking investors, thanks to its strong cash flow. Their focus on higher margin deliveries signals positive long-term growth. Today's market reveals that while tech and consumer sectors thrive, caution lingers amid economic uncertainties. Investors should watch upcoming earnings reports from FedEx and FactSet for deeper insights. Staying informed and adaptable is essential in this ever-evolving investment landscape. Embrace the journey, for knowledge is your greatest ally. Chapter 2, Simple Finance Terms Explained. A correction occurs when the stock market falls by 10% or more from its peak. Picture a thrilling roller coaster ride. After soaring high, it dips down before climbing back up again. The Gini coefficient reveals how income is shared within a society, ranging from 0, where everyone has the same, to 1, where one person holds it all. Imagine a pizza. If one person devours the entire pie, that's a Gini of 1. If everyone enjoys an equal slice, that's a Gini of 0. Alternative investments are non-traditional investments, like real estate or hedge funds. Envision a treasure chest brimming with gems. While stocks and bonds shine like diamonds, alternative investments are the vibrant, unique stones that enrich your collection. In the world of finance, understanding these concepts empowers you. Embrace the journey, for every dip and every treasure leads to greater wisdom. Chapter 3, Top Stock Pick of the Day. Today, let's explore why EG shines as a brilliant investment choice. Here are 3 compelling reasons that set EG apart. First, robust revenue and profit. With a revenue per share of $407.24 and a net income per share of $19.91, EG is thriving. This financial strength is a beacon for investors. Second, outstanding liquidity. A current ratio of 9 reveals EG's ample cash reserves. It's ready to meet short-term obligations, showcasing its financial vitality and resilience against surprises. Third, EG stands tall with 0 debt. This empowers the company to navigate economic storms, whether from trade wars or shifting tariffs. Additionally, EG boasts a free cash flow yield of 34.1%, generating substantial cash after expenses, and a dividend yield of 2.37%, reflecting its dedication to rewarding shareholders. Yet, be mindful, EG operates in a sector vulnerable to global economic shifts, like tariffs and changing consumer preferences. In summary, with its solid financial foundation and promising market position, EG emerges as a wise choice for growth in the coming year. Invest wisely, and let your choices reflect your vision for a prosperous future. Chapter 4, Core Long-Term Strategy with ETF. Picture a vibrant garden, not just a single bloom. That's the beauty of ETFs, exchange-traded funds. They allow you to invest in a bouquet of stocks, simplifying your journey and reducing risk. Now, Envision the MSCI World Index as your garden map, showcasing the finest flowers from 23 developed nations. By investing here, you embrace a rich tapestry of global companies, spreading your risk and nurturing your wealth over time. Today, MSCI's stock blossomed, fueled by a 15% surge in their World Industrial Sector Index this year. This growth signals that more investors are harnessing MSCI's tools to navigate the economy's sectors, a promising sign for the company. In another development, the US and UK have forged a trade deal, allowing more cars to cross the ocean with lower taxes, potentially invigorating trade. Meanwhile, World Equity Group has trimmed its MSCI shares by nearly half. While this may raise questions, it's a typical move as investment strategies evolve. Overall, MSCI thrives, buoyed by strong sector performance, even as some investors recalibrate their holdings. Investing carries risks, think long-term and avoid using urgent funds. Chapter 5, Quick Financial Lesson. Tracking your net worth is like capturing a moment of your financial vitality. It reveals the balance between what you own, your assets, and what you owe, your liabilities. Picture this: a bike valued at $300, a savings account holding $1,000, and a student loan of $2,000. Your net worth stands at -$700, a reminder of where you are. But here's the beauty: as you save a little each month and chip away at that loan, your net worth begins to rise. Each small victory fuels your journey toward financial independence. To keep this journey clear, list your assets and liabilities every few months. This simple act shows your progress and highlights where to focus next. Here's a powerful tip: set a quarterly reminder to check your net worth. Celebrate every achievement, no matter how small, and adjust your goals as you grow. Remember, every step is a stride toward your financial freedom. Chapter 6, Real Stories of Financial Success. In the vibrant heart of Melbourne, Australia, a determined engineer named Mark Whitaker began a transformative financial journey in 2015. He pledged to save 40% of his salary, choosing to invest in low-cost index funds, particularly the ASX 200 ETF, which mirrors the top 200 companies on the Australian Stock Exchange. As the years unfolded, Mark's dedication bore fruit. By 2020, his initial investment of $50,000 blossomed into a remarkable $90,000, fueled by the magic of compound interest and a rising market. Mark discovered a profound truth: consistent saving and wise investing pave the path to financial freedom. His journey reminds us that it's not about how much we earn, but how much we save and invest. So, let Mark's story inspire you. Start saving today, invest in your future, and witness your wealth flourish. Chapter 7, Summary and Personal Investment Strategy. Thank you for being with us today. Let's recap our journey. In Chapter 1, the market dances between hope and caution. Technology stocks lead the way, while energy faces hurdles. Notable players like Warby Parker, Darden Restaurants, and UPS shine with growth potential, even amid uncertainty. In Chapter 2, we broke down key concepts. Corrections signal a market dip of 10% or more. The Gini coefficient reveals income distribution, and alternative investments help diversify beyond traditional stocks and bonds. In Chapter 3, today's star is EG. With strong revenue, excellent liquidity, and no debt, it stands ready for growth. Its solid cash flow and commitment to dividends make it a wise choice, but stay alert to market risks. In Chapter 4, we explored ETFs, offering global diversification and reduced risk. The MSCI World Index exemplifies strong sector performance and growth potential. In Chapter 5, tracking your net worth is vital. Regularly assessing your assets and liabilities helps you celebrate progress and refine your goals, guiding you toward financial independence. As we close, I'm adding $15 to my MSCI World Index investment and trying $10 in a fractional share of EG, both with 1-to-1 leverage for cautious, diversified investing. Let's debunk a myth: you don't need a fortune to hire a financial advisor. They can guide you at any income level, enhancing your wealth building journey. For today's daily finance challenge, consider delaying one non-essential purchase to invest instead. Share your thoughts in the comments. Remember to research, test strategies, and consult a financial advisor before making decisions. If you enjoyed today's video, please like, comment, subscribe, and turn on notifications to stay updated and support our channel. Join us next time as we continue to expand your financial wisdom. We welcome your thoughts, questions, and topic suggestions. Thank you for watching. Let's keep growing together on this financial journey.